All right. Good morning, traders, and welcome to the opening bell. Today is Monday, June 1st, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. And the month, we come into a market that's a little quiet. It looks like we got some fresh U.S.-Iran hostilities overnight, raised further concerns about supply disruptions and the security of shipping through the strait. So we're seeing that oil is trading higher. Nonetheless, markets seem unfazed. We're a bit poised, or we are opening just a bit higher on all the major equity indices. Dollar is gaining a little bit of favor here early in the session, but all the major ranges still hold. So we'll go over all the US dollar crosses, euro, sterling, Aussie, CAD, and yen. If you have any other questions or trade setups you guys want to review, feel free to throw it into the message board at any point. We'll be getting started in just a second. All right, great to see everyone in the room. Packed house this morning. Angie, Ashish, Danny, man says hello again. No webinar missing today. Thank God. Cheers, man. Great to see you. Latonia, good morning to you. Kevin, Hugh, James. It's a full house. Not going to get to everyone. Philippe, great to see you guys all this morning. So here's the DXY. We're coming off of that slope support. Guys, nothing has changed with this chart. Same chart I've been showing you guys on Friday. And all throughout last week, we were looking for support at the previous week's low, right? And so we were looking for a breakout of just last week's opening range right below critical resistance. Remember, 99.50 is massively important. That's the January high, the 618 of the decline off the March high, the highs from last month, right? All right there. So we got to kick back off that. We broke below support on Friday, but we closed literally right there. And that same low is now the monthly and weekly open. Initial support on DXY 98.95 all day long. Okay. Critical support still 98.68, 98.58. That's the 200-day moving average. That's the May low. Remember, this is a big pivot. That's the August high day reversal close. Big zone. So that's bullish in Val. This is initial support at the monthly open. Key resistance is still 99.50. Look for a breakout of that. Initial breakout is right here, but this is big support. Anything beyond the 200-day moving average would suggest a more significant high is in place and a larger trend reversal is underway towards 98.23 and potentially the yearly low. So we're in a sweet spot right into the start of the month. I love it. We're trading right into resistance. Ideally, you get like a opening range type of play right below that zone that gives us the breakout. But at the end of the day, northbound of 99.50, that would be breakout and resumption of the broader May uptrend for the DXY. So that's where we start off the session and the week and the month for the dollar. Here's euro. Remember, euro's coming off big resistance too, off big support too. Just as DXY is trading right below resistance, here's euro right above support, 1578, 1598. That's the January close low, the 618 of the rally. Last month's low, we rebounded right off that. That's from the monthly charts. The weekly charts. Now, what I wanted to highlight for you here is this. Check out that 52-week moving average, 1672. Okay, that's resistance. Here's support. Here's key resistance up here. So just looking at it from 1,000 feet up, I can identify some pretty basic levels that look legit. You drill down deeper. Here's the daily chart, right? The 200-day moving average, 1682. The 52-week is 1672. The monthly open, 1660. You getting a theme here? We're right below resistance on a whole bunch of different time frames. This is still bearish in Val. This is still the level that the bulls would need to break to mark a more significant low and resumption of the March uptrend. But all things held constant, this is initial resistance. Okay. Key support. Well, we already know key support because that was highlighted on the weekly charts, and that's 1578 to 1598, last month's low. So really well-defined levels here in euro as well. Here's the 4-hour chart looks like, also unchanged from last week. The two levels of resistance we talked about, 1680 and 1712, right? 1712 being like we didn't want to see anything above that. Here's 1680, 200-day moving average. Basic 38.2 retracement of the whole decline off the highs from April. Beautiful touch, beautiful kiss. Here's the pullback. Key support still 1578, 1598. Okay, now if we're heading lower on this stretch, 1680 would need to hold any resistance. Initial resistance, I want you to look at the monthly open, the weekly open, 1570, 1660. Sorry, I'm a little excited this morning. Back-to-back webinars will do it, but 1660, right? If we're that's initial resistance. So if we pop back higher in US trade, I'd love to see that hold if we're going to go for the move lower. But ultimately, 1680 is going to be the line in the sand. If we break last week's high, you're probably looking for a test of downtrend resistance. So the levels are really well stacked, really well defined. I do like that momentum struggled into 60. Remember, I always tell you in strong downtrends, you actually want to see momentum fail near 60. In strong uptrends, you actually want to see momentum fail near 40, right? It's just a observation I made over the years. So like here's 60 momentum on that rally off the low from last month, couldn't make it. So if we get this move here and drop below 30 on the downside, that's the move you want to kind of look for on the resumptive move. So as always, guys, not a trade recommendation from FOREX.com or StoneX. My humble interpretation of the technicals here, but euro dollar trading right above support into the open of the week. Here's what sterling looks like. Still don't like it. We're getting some nice price action along the weekly open. I'm not sure why my weekly marker is not there. Oh, there it is. Around the weekly open, right here into the yearly open, rather. 34.74. The February low day close is 34.64. Kind of right there right now. Remember the line in the sand was 35.22. That was bearish inval. We almost reached there last week. We broke lower. Here's initial resistance. It's a low conviction trade for me, guys, because this is where we are in the grand scheme of things. We're right slap in the middle of a massive range. You're above the 200-day. You're below the yearly open. You know, objectively, I would say like near term, look for a breakout real close of this, just the 200-day and the yearly open, because it does look like potential consolidation, lower highs, higher lows. But it's low conviction. Low conviction. If this slope is legit, rallies would need to hold 35.22, support 33.50, basically. Questions on sterling? No major event risk on tap for sterling. For the euro, by the way, you do get inflation data tomorrow, and then retail sales on Thursday. We'll cover that, but inflation data tomorrow may be a mover for the euro. All right, Aussie. So what's going on with Aussie? Looks like failure near 72. I don't know. We'll have to see. Remember the ball game here. 72 is our big line in the sand. That's a huge level. 72 into 72.13. 100 off the low, 618 off the high from 2021. Last month's open was 72 proper. So any way you slice it, that's a big level. We popped through it. We reversed below it. And the threat has been, hey, looks like that's a reversal of a raised ceiling. So a reversal right ahead of uptrend resistance. That potential looks for a potential test of uptrend support. That was the first test a few weeks ago. If we break this median line, you're looking for a move towards the lower parallels. Still within the broader uptrend, but that's the threat, right? Drill down into the daily chart. Looks like this. Ideal scenario, your monthly opening range is taking shape right below 72. Last Friday's high, guys, was 72 proper. Last month's open, 72 into 72.13. That's key resistance. So you're trading right below lateral resistance, plain and simple. Your monthly open comes in at 71.85 now. Drill down deeper. Here's the 4-hour chart. Same chart we've been looking at. This was our line in the sand. This was bearish invalidation. We rallied right into the yearly open, monthly open on Friday, pulled back. We closed again right at the previous week's high. So the same exact setup we were looking at in euro happened right here. That's the only reason why I still have 71.85 on there. That's now the monthly open too. So here's the move lower. Ultimately, the bears need to break 71.08 to suggest larger correction is underway. At that point, I tack on like an extension that looks like, just to show you what it looks like, because I was looking at it this morning. It's pretty sexy. If this does happen, right? The 100 Comes in right there. In line with, let me put it on the bottom so you can see, in line with the 618 of the rally, 70 proper. Like it's sick. Really, really awesome level. But that's all contingent on 71 breaking and 72 holding. Initial resistance 71.85. Bearish invalidation 72. Northbound of 72, you're looking for a resumption. You're looking for the high close at 72.58, 73 all day long. But that's the threat for Aussie dollar from a technical standpoint. Questions or on anything on the Aussie? Pretty clear on data for the remainder of the week. There's not much here, so you're looking for the dollar to drive. Dollar CAD hanging by the skin of its teeth. I was just saying this in the previous webinar. I was unbelievable to see this. So our line in the sand was 37.95. Remember, that was the weekly opening range low, and we had popped higher. We turned right ahead of that 786 retracement. He's like, look, 200-day moving average there, the 25% parallels there, the weekly opens there. Let's see if we can hold that. If that breaks, man, the slope is right there, and you're looking for a potential test of the yearly open. It broke, and then we tagged slope support on Friday to the pip. Unbelievable. Here's the recovery. Is that a hold of uptrend support? Looks like it. Looks like it. But we're right now, look, we're already testing, and this was something I was just looking at earlier today too. We're already testing a break of the 618 of that range. So if we're going to mark resumption here, resistance is still 38.77. That's still the median line is there over the next couple of days. Key resistance into 39.40 being the September high day close, the October low day close, real nice pivot in price. But this year's high day close is 39.15. So the levels are well defined. Friday is going to be the big event risk for this. You've got non-farm payrolls and Canadian employment data hitting at the same time. Might be the catalyst that you need. I'm tiptoeing here early in the month, early in the week in dollar CAD. You're trading right above near-term uptrend support, right above the 200-day moving average, Fibonacci support. The monthly open comes in right here. Again, this is why I just have this line still here at 37.95. That's the monthly open. So let's see what happens. If dollar CAD is heading higher on this stretch, dare I say, losses would need to be limited to 37.95. You need to break above 38.78 to mark resumption. Not a trade recommendation from FOREX.com or StoneX, my humble interpretation of what the technicals are saying here. If we break the weekly open, the monthly open, if we break this slope, the risk is right back at the yearly open, right back to this key pivot. The 38.2 of that drop from November, 37.30s, 37.22. One other thing I want to say, remember what I told you on Thursday. When we get these massive outside day reversal candles, my initial inclination is to look for a break of that candle's range. So we were nice and cute on the near-term charts there, showing you what levels may be viable on the real near term, like into the start of the week and month. But on whole, we're looking for a break of Thursday's range for guidance on dollar CAD. Topside break, you're looking for slope resistance dating back to the highs they made all the way back there in 2025, specifically April. Downside break of that range, you're looking for a retest of the yearly open. Dollar CAD on menu today and this week. Questions on Loonie? So is dollar yen breaking resistance? I don't know. We're making another attempt here today. 59.50 was the level we've been talking about. We tried to push through that Thursday and Wednesday of last week, but we did not mark a close above. Okay. So if we do break it today, that would be the first daily close northbound to 59.50. Momentum would be breaking above 60. Looks like it's testing 60 right now. And that would give us a run towards the yearly highs again, 60.21, 60.73. That's key resistance. So it is what it is. It's dollar yen. it's still a trade I just can't get excited about. ATR is just disgusting. On the larger scheme of things, here was what we look at in the weekly chart, right? We broke the 618 3 weeks ago. Here's key resistance. The 2024 high week reversal close. That swing high from April of that same year has been a very nice resistance range all year long. That's the next major level on the upside if this breaks. Initial resistance right now, 59.50. Let's see what happens into the close of the session. Remember, as you head towards 160, then you start to get the intervention talk again, because that's where they came in back here last month. Or I guess this is 2 months now ago, April. So take it for what it's worth. Initial support 58.55. That's just the 618 of the drop off last month's off the April high, that is. Bullish invalidation still 57.70 to 57.89. So if you're not already in this trade, you're chasing. If you want to get cute and try to jump on the side of the BOJ, it sounds suicidal. So, not still my cup of tea here on dollar yen. Look for, if we are heading higher, the monthly open, the weekly open right now comes in right here. If we start to drift here, that converges on the median line basically tomorrow right there at 59.27. Just something near term to look at. All right, that's dollar yen. Any other questions? Okay, so we're still working under the assumption that we're looking to see if gold is going to actually make a test of make a conviction that low last week was pretty big. Remember, the assumption was this could be a more conviction low because of where it happened, because of when it happened. That's your 52-week, that's your 200-day, moving average, 100 off the high, a 618 off the low, and this year's low week close was all right there. So the conviction that a more significant low was in place would have been a close back above 45.33, 44.92. Well, guys, we closed on Friday at 45.40, $7 higher. So is that a break? Probably not, right? But the assumption still lasts. So look, real near term, the 618 just up the rally off the Thursday low, the Wednesday low, is 54. I was just showing the guys in the webinar earlier today that level. Real near term, look for reaction there. Might be a tell if that were to hold with a buckle back above the monthly open, which is now 45.40, putting you back on the constructive path. Key support still 43.83 and to 44.06. Anything below this, you're looking for the yearly open. You're looking for 42.24 potentially all the way down here. So it's really do or die early in the month for gold after testing a major level. I'll bring your attention to one interesting also a bit of information here on the weekly chart for gold. We never closed below support. Hey, this is the same chart we've been looking at for weeks. Okay, there's 44.92. There's 45.33. We didn't close below it once. We're trading below it now, but again, the weekly close is what I'm talking about. We haven't closed below it once. So if last week's low was more significant, we need to push back through 45.40 to mark that resumptive move. Make sense? Even some divergence here on that last low, right? Bring it to a close. Lower low, lower low. Nope. No new low registered in the oscillator. Right near 40, mind you. So real critical here. And if it breaks 43.83, things could fall apart real quick. So like fishing for a low. Let's see if we get it. Questions on gold? All right, oil. Seeing some upside here today. A new slope I threw on here. I don't want to get you guys onto this slope too early just yet. This was just for my reference. I showed it in the last webinar, but it's too early to rely on this slope. What I wanted to show you is still 85 is still the key level. That's the high week reversal close for the year. That's where we closed. The lows later that month. The April low day close. All of that converges on basic consolidation support. So that's still your line in the sand. The fact that we're buckling back above 97, 90, 79, 91, and 78, and back above what could be the median line here suggests that you have the potential for more upside over the next couple of days into the start of the month. Obviously, this is 100% headline driven, guys, and more talks of any kind of conflict buildup, breakdown in negotiations, a straight up resumption of kinetic fire, anything like that, you could see things start to rally pretty hard again. The problem is duration. There's no outlook in sight where the markets are seeing an end to the supply issue, and that's going to only get worse as time goes on. The inflationary concerns of what this means for agriculture. And we talked about it briefly here a couple of weeks ago, guys, but just from internal communications with guys I have here at StoneX, we have a vast array. Obviously, we cover so many different markets, every market here. I was talking to some of those guys, and like the agriculture and the fertilizer issue, the impacts that's going to have on potential inflation and higher energy prices and its impact on food, that's not even seen till like late September, October. So the longer this goes on, markets are starting to be a little bit more forward looking. And so I wouldn't be too surprised if we don't get some good news soon, if we don't start to see oil start to misbehave again. And this is certainly not a welcome break here above 91 again. So keep your eyes on this market. We'll be tracking this all week long. Last but not least, Bitcoin on the drop. I see you in the room, man. I saw you in the last room as well. But hey, this is pretty big. Slope support's in play pretty darn close to where we are right now. 71,400, 71,300 where you start to run into basic upslope support for the formation we've been tracking essentially since March here. The lateral level, though, is still 72.83 into 70,531. That's critical. That's the low week close for the year and the low day close for the year. Both of those levels, if broken, would confirm a break of this 3-4 month uptrend. And that would open up the potential for a much steeper decline in Bitcoin towards 65,951. That's the March low day close, and the low close for the year. The objective low close is 62,795. That's if this breaks. So the potential right now is for the downside to find some sort of reaction here. If you're holding shorts on Bitcoin, this is where you want to start to put some limits, reduce short potential, lower protective stops. If this breaks, a good candidate, by the way, for a trailing stop, if this breaks, the downside could be pretty vicious. Okay. Initial resistance is right back up at 76,159. Bearish invalidation, the level that the bulls would need to break to suggest a more significant lows in place and potential resumption of the February uptrend. That's 78,000 all day long. You tested that pivot zone for a while. That's all on the median line. Above that, you're marking resumption. Okay, you're marking resumption. So the levels are pretty clear here, but you're coming in some pretty major support, and the bulls need to step in if there's any hope. Anything sub 72.83, we're in trouble. Also, one other thing, I didn't want to have it on here because it was kind of clouding up the chart, but just to bring things in potential, below that, there's the 618 of the rally. It's kind of cluttering up the chart, and it doesn't converge on any major previous inflections in price. But I just wanted to show you that reference point, 68,600, for what it's worth. That's there as well. But watch this decline here in Bitcoin. Any other questions? Eman says, yes, with full eyes at both Bitcoin and gold. Amazing setups. Thanks. More than welcome. Always a pleasure to see you in the room, Eman. All right, guys, listen, we're early in the month, early in the week. We have non-farm payrolls. It starts off on Wednesday with the ADP report. That's your first glimpse at private sector. And then the more encompassing non-farm payroll hits on Friday. So stay nimble early in the week. Stay nimble early in the month. Keep your eyes on the headlines. I'll keep you updated on MB Forex on X of anything that hits either from the president's truth handle or anything major with regards to the war headlines, because the markets are hypersensitive right now. All things held constant. You're kind of chugging along the highs. One thing I did want to note with regards to equity markets, just the chart I've been working with for the last couple of days. Hey guys, it looks like S&P could be testing uptrend resistance here. Again, a slope I don't have too much conviction on just yet, but the interior levels have offered some decent inflection, catching the highs. And again, looks like we're touching the upper parallel here. And here's your monthly open. It's a constructive trade, but watch that slope. Okay. Internal levels, you'd want like 74.48 to hold support if we're heading higher on this stretch. Bullish invalidation at that close low from May 19th. That's 73.52. That's bullish inval. Near-term support. If we break that slope, the next measured move is up at 67.77. Here's what it looks like on the weekly chart, right? That's the 1618 extension of the breakout from that advance off last year's low. So 1, 2, 3. That's the 618 extension. So it's a constructive trade. It's a break of the early opening range. You're looking for a third, fourth quarter high, but it looks a bit rich here. And if that slope interpretation is correct, suggests that right early in the month, you might be a bit vulnerable. So let's keep our eyes on that to see if there's any merit to that. I also wanted to highlight, or I also highlighted earlier, just for reference, there is ongoing divergence here in the S&P 500, right? Price action with a higher high, the oscillator with a lower high. Now, both of those reference points are northbound of 70, so that's not a strong signal by any means Nonetheless, it is divergence by definition. So we'd have to snap that, right, over the next couple of days, early in the month. That's the picture that we're looking at with the S&P. All right, takes us right into 9:55. We'll go ahead and wrap it up there. Mondays are always super busy, and especially here early into the start of the month. Stay nimble. We'll pick things up tomorrow morning. We do have inflation figures out of the Eurozone tomorrow, so keep that in mind right ahead of the session. So that might impact Euro price action, but really the first major event risk will be the NFP print, or the ADP print rather, on Wednesday. Till then, best of luck trading, guys, and I will see you tomorrow morning bright and early. Cheers.